A very good afternoon, everyone, and welcome to our September webinar, Finding Future Growth Stocks in Time of Turmoil. I'd like to just focus on reporting season again. Now, we've obviously come and gone, but Greg, I'll start off with you. Which one stock do you think stood out through the noise and through the trends of reporting season that you sort of that caught your eye throughout the last 2 months or so?
Sure. Thanks, Shepard. Well, firstly, let me say I certainly didn't go through all the results. So whether this is the one company or not, I don't really know. But one of the stocks that I have followed before reporting season, I recommended it, I think back in April, something like that. That did report a good result, and its share price has held up very well despite the volatility that's gone on in the last couple of months. Is a company called Cimic. Now that used to be the old Leighton's Holdings, and it rebranded itself probably late April, early May. The reason why I like this stock, fundamentally, there's a number of reasons. It's not a standout cheap stock. It's not the cheapest stock on the market, but it has had a change of ownership, and it is majority owned by a Spanish group that last year or a couple of years ago bought out a German group called HOCHTIEF. They did a complete restructure of HOCHTIEF and had a really good impact or influence on the share price over there. And they're effectively taking over Cimic in a similar manner by taking a majority stake in HOCHTIEF, which had a major shareholding in Cimic Group. So the management teams all changed. Leighton Holdings, as it was known previously, had a lot of issues with management. And if anyone knows anything about large contracting groups, then it's all about the quality of management and their ability to execute on large projects. So I think after a number of years of having some bad results, poor financial management, all those sorts of things, I think this company's a good turnaround candidate. And if you look at the share price chart there, which I think we've got as well, I'll be able to I guess talk listeners through the reasons why I like or how I combine the charts with the fundamentals. So as you can see, that there's two little lines on that chart, a blue line and a gold or a yellow line. That's the 50-day and the 100-day moving average. As you can see, the 50-day moving average is above the 100-day moving average, which in my definition says the stock is in an uptrend, and that's been in existence for nearly a year now. And obviously you can see the general trend there is moving higher. Now that's despite the considerable volatility the market's displayed, and even though the share price has been volatile as well, the overall trend is moving higher. If you looked at this over 10 years, you would have seen a share price that was up around the $40 mark 10 years ago. That fell all the way to $15, and then now we're turning back around. So the results that came out for this company at the start of reporting season were solid. They weren't outstanding by any means, but the new management team's only just recently sort of taken over the business, so there's a lot of work to do. There's some asset sales plan which could potentially improve the balance sheet more and improve profitability, and by that I mean return on equity. So I think there's some hidden value in this, and there's some potentially really good upside. And as long as that share price trend stays steadily moving higher, then that tells me that the market believes that story as well. And I think in the next 12 months you're going to see a big move higher in the stock.
Hey, Greg, very quickly, I'm just going to take you a step back. You mentioned moving averages when you're talking about Cimic, and Ronald asked a question here. He said, when it comes to moving average, do you use 20, 50, 100, or 200 days?
Look, as you see by this chart, and all the charts I use pretty much is a 50-day and a 100-day. A lot of people use 200 days and 50 days. I use 50 and 100, and when the 50-day is higher than the 100-day, and when that has been in existence for a little while, or when it's crossed over, based on the shares, if the share price is moving out to new highs as well, then that tells you that the trend is improving and that the market is warming to the story. So as far as I use, it's the 50 and 100-day moving average.
All right, awesome. Chris, very quickly, which stock do you feel stood throughout the trends.
Okay, thanks for that, Shepard. What I'm going to do is pick a stock which has come up in a couple of times in what I've just been talking about, and that is Nick Scali. Nick Scali is a furniture retailer, as most of you would know. When I produced this table, if you like, based on the filters, and if I sort by forecast change in value, lo and behold, Nick Scali is at the top. Nick Scali was also in our money portfolio at the start of this year, if I just quickly refer to that, and you can see that it's actually up 34% since the beginning of the year. So it's been doing really well. Quick disclosure, I own it personally. What are some of the key things that we can ascertain about Nick Scali? What we'll do, we'll just click on the stock here, and this will load what we call the evaluate screens, and I'll go firstly to this summary page, the furthest to the left. And you can immediately see that there's a whole lot of green ticks down the left-hand side, and there's one red cross. The red cross is that there's less than 5 analysts that provide coverage for this stocks. There's some, but there's less than 5. You can see on the green side, excellent profitability, earnings are growing, cash exceeds debt, so that they do use debt, but they always have more cash in the bank than they have debt. Their long-term cash flow has been very strong. The funding surplus that I talked about earlier, they indeed are generating a surplus, which means they have more cash that they're generating in the business than their requirements. They've also got great forecasts for earnings, and the analysts, whilst there's not too many of them, they're generally in agreement as to what those forecasts should be. So lots of positive attributes. What I also just want to highlight as we look at these is that the way Skaffold works, for each business, we'll pull out this summary page, but we don't necessarily pull out the same attributes. The algorithms that underpin Skaffold will dig into the business and look for key metrics to highlight on this page. So for some stocks, there'll be quite a number of key points being highlighted. For others, there will only be a few. And obviously for some, there'll be lots of positives, and for others, there'll be lots of negatives. You know which ones I prefer. So, in Nick Scali's recent results, we saw that revenue was up 10% and profits were up 20%. So that's very encouraging, obviously. Same store sales increased, and they also opened 7 new stores, including expanding into Western Australia. They've managed to increase their market share in what is an environment where consumers have been quite cautious. I'm sure most people are aware that the economy is it's not declining, but it's certainly not growing at a rapid pace. I think GDP's around the 2% sort of mark at the moment. There's been a bit of a turn down in consumer sentiment, but this business is managing to really maintain its market share and indeed grow its market share despite that. And that comes down to the argument that we were making earlier, Shepard, which is that it really is about finding great businesses, and great businesses will weather the storm. Obviously, profitable, great circumstances help great businesses, but in bad, difficult times, what can quite often happen is that the competitors of the great business find it difficult and may indeed have to close their doors. And then when the good businesses come out the other side of that difficult time, they're in an even stronger position than they were going into it. This business has been around for quite some time. If we just look here at the capital history screen, you can see 10 years of history there. And this chart, it's a really encouraging chart when you're looking at a business, because what it says to you is that over a long period of time, these guys have proven that they know how to run a business, right? That includes the period of the GFC. It includes some good years, but it also includes some tough years. But throughout that whole period, the equity in the business has continued to rise. The profits that the business generates have continued to rise. The return on equity is really solid, up around almost 40% there. Despite the fact that it's in a pretty competitive sort of market, they've managed to run it in such a way that it really does well despite what's going on. One thing that I perhaps a note of caution, but the Australian dollar has been declining, as everyone knows. For an importer, that's a negative. Their costs are going up, but they've managed to counter that by other efficiencies, and so their overall costs actually haven't risen. Now, if this trend continues, with the AU dollar falls even further, and some forecasters are saying that it might get down to around 60 cents, I certainly don't know, but if that did play out, that will put some pressure on their future profits. But I think this business has shown that it is a sufficiently resilient business that that may have a short-term impact, but in the long term, I think they'll prevail. You can see there that it's earned the A1 score, the Skaffold score, in most of the last 10 years, and indeed consistently across the last 4 years, and that was reinforced again with the report that came out last month about their latest year's results. That's my pick, Shepard. I'll hand back to you. Thank you.
Well, thanks about that, Chris. If you have any questions, feel free to give me a call on 1300 Skaffold, or just send me an email at team@Skaffold.
Investing in shares can be rewarding when you do your research, but it can also take up a lot of your time. With so much information out there, how do you quickly sort through the companies worth investing in and those to steer clear of? Skaffold is my research tool of choice. It tracks and reports on all ASX listed companies, plus thousands of global stocks daily, helping me decide which stocks to buy and sell. I can quickly filter through the reports to get the information I need. The rating system is like a set of traffic lights for the stock market. Green is good, orange is caution, and red is don't go any further. Skaffold's top stock choices have been highlighted for their outstanding performance by Money Magazine. With Skaffold doing the work for me, I have the confidence to make investment decisions without having to spend hours sifting through financial data. Now you can take control of your time and your portfolio. Why not take Skaffold for a test drive today?